Hello traders and welcome to the market opening preview, June 7th, 2016 on a Tuesday. Alright traders, good to be with you. This is brought to you through FXCL Excellence in Trading. Traders coming to you live from Thai Thailand, bright blue sunny skies and white sandy beaches. Absolutely gorgeous today. Traders, got a lot to talk about. We got Brexit coming up in 2 weeks, and we had FOMC Yellen speak yesterday. It was about 12:30 on Wall Street. So let's get going, and let me introduce myself to you before we get started. My name is William Gilday. I'm your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I will tell you I do record this during the Asia session and early in the Asia session, as currently it is 7:23 a.m. in Thailand, and it will be 23 hours on Wall Street. All right, traders, I started trading in the year of 2006, and in 2008 I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, watched an infomercial on television and went to a seminar on Forex, and 2006 got hooked, and I've been trading ever since. Traders, I trade two ways. Well, I trade one way using two factors. One is fundamentals. I need to know about fundamentals, and I pay for newsfeed for me to be able to do that. I need to be on top of what's going on around the globe, as we trade as macro traders, not micro traders. We don't just trade one currency pair. We actually trade the globe, because if something happens in a different country, it can affect our trade, such as Janet Yellen spoke yesterday, and it's affecting the dollar. Okay? All right, so then after I take care of all of the fundamental and I try to absorb as much as I can for the day, I move over to the charts. And yes, I am a technician. I love analyzing charts. Candlestick prices, price action, price structure, price value, support, resistance, all of that comes into play. Remember, candlestick patterns tell you a story. It's telling you what's going on with price action and where you can possibly see that happen. I use the Fibonacci tool a lot on my charts, and you'll see on our charts today that I use three moving averages. One is a 10 moving average, the other is a 55 moving average, and the green line is a 200 exponential moving average. Why do I put these on my charts? Because everybody else puts a 200 exponential moving average on their charts. Why do I use Fibonacci? Because everybody else uses Fibonacci's for entry and exit levels and key levels that we need to know about. Price levels are so important to know and to see, even if it's not a fib. If you just mark your charts with significant price levels. I like the double zeros, the 50, the 20, and the 80. So I always watch those price levels. When price gets there, just make sure it's not at a significant level. I'm a pullback trader. I like to watch the trade happen. I like to see the currency pair make the move, and then it pulls back to a fib level, and I will take that trade in the direction of the trend if data was nice enough to go with the trend. So that's just a little bit about myself. Let's get over to the legal stuff and keep the legal people happy. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, remember the key to this game is capital preservation. Live to trade for tomorrow, right? All right, traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. Meaning, if you're on a demo account, 6 months later you go to a live account, you'll see a change in your trading. Why? Because your eyeballs are going to be stuck on that profit loss box, because your hard-earned money is now at risk. Every time you click a trade, you have risk on the table, right? So we need to minimize your risk and really take advantage of your gains and let them run. Okay. All right, let's take a look at some news and commentary. News this week is really light, folks. We have really light data this week. We have 1 or 2 news events each day. So this is really a technical week. I think probably the biggest one was FOMC Yellen spoke yesterday. We'll get to that in just a second. However, let's take a look at how the markets closed. The Dow 30 closed positive 0.64%. The S&P 500 closed positive 0.49%. The NASDAQ closed positive 0.53%, with the small cap 2,000 closing positive 1.17%. Glad to see that. Traders, you know why? because I trade options in the U.S. market, and we need to see some green. All right, the DAX closed positive 0.18%. The FTSE 100 out of London closed positive 1.03%. And the CAC 40 out of Paris closed positive barely at 0.04%. With the Eurostoxx 50 closing positive barely, really pretty good, 0.24%. Traders, come on over to Asia. Remember, some of these markets are not open, and I will tell you which ones are not open. However, the Nikkei 225 is open. It's currently negative 0.08%. The S&P ASX 200 out of Australia is positive 0.30% and currently trading. The China A50, which is not open yet, has about another 36 minutes to go, closed positive, negative 0.63%. And the Hang Seng also opens in about 30 minutes, and it closed yesterday positive 0.40%. However, the Kospi out of Seoul, which is currently trading as positive 0.72%. Traders, let's head on over to our economic calendar and see what's going on. We did have AIG Construction Index out of Australia earlier today. There was no consensus, and it's a low-impact news event, so it really did not affect anything we have today. However, the big data for today is the Aussie interest rate decision. Consensus is 1.75, and of course, previous was also 1.75. We are not expecting any kind of a rate hike or anything from a rate decision today. We're expecting them to stay at where they're at. However, the big news is that right after that, we have an RBA rate statement. So the statement is what's going to move the market. Okay, we're going to try to find out what they want to do in the future. As they've said in the past, that they were looking to cut rates, but the consensus is they're not going to do it this meeting. However, that doesn't mean they won't do it this meeting. It just means they said last time they were not going to do it. So be prepared for surprises. Just like last week's non-farm payroll. Bunch of surprises. Folks, we don't have anything else really to talk about. Then we get into the U.S. session, and the only thing we have is out of the CAD, IV PMI for the month of May. Consensus is 51.5. Previous was 53.1. So that's pretty much what's going on there. Not a lot of news. Like I said, it's a pretty slow news week. So we just need to keep an eye on that as we go through our trading day. Commentary is this, traders. Stay away from the pound pairs. It's going to get more volatile as we get closer to the Brexit vote, which is 2 weeks from Thursday, if I have that correct. So 2 weeks from Thursday this week, we have the Brexit vote, and we'll see what happens. It's getting close. They're putting out new polls every day, and those polls are just, moving that Great British Pound all over the place. So need to be careful about that. My opinion is just don't even think about touching the pound. Don't stand in front of the freight train, folks, because the freight train's going in both directions, and we don't want to be in front of that. All right, let's get to the charts. I do think it's going to be a good trading week. We've had some little bit of price action, but we sure haven't had any in this currency pair. Let's take a look at the euro, and this is the euro dollar, and look at this, folks. It's just been sideways, absolutely sideways. Nothing's been going on. Even after the FOMC chair Yellen speech, they had this one spike on that blue candle. That was about it, and then came back to where it started. So you can see it almost bounced off that 55 EMA, the blue line. But folks, all I want to do is sell the Euro Aussie. So I'd like to get this down to below the 55 EMA. Let's get a retest where a candle comes back up towards it, and then we can enter it at 1.1341. And we want to sell this at support, which is the 200 exponential moving average, and that's at 1.1262. A little bit of concern is that all three exponential moving averages are pointing to the upside, and we do have some really nice angle and separation. So that doesn't tell me that this pair wants to do anything. So I would think that we're probably going to stay in a sideways range for quite some time, at least for the next 24 hours, because we have no data coming out of the euro. So there's nothing to move this. There's nothing to stimulate this pair unless the dollar really drops, and I don't see that happening. I think the dollar is just going to remain where it is, and it's just going to drift around this 94, 88 area, 95 area, and I just don't think it's going to do anything other than that. Janet Yellen spoke yesterday. She did not bring anything new to the table. She was hawkish, from what I can see, not as hawkish as she was before. She did not say we're going to raise interest rates in the next couple of months. She just said the one NFP number will just delay the interest rate decision, and they are looking to raise interest rates in the months ahead. The key to that was months ahead. So I'm thinking maybe September. Okay. And then she'll do one probably in November, December, right before, probably just before the presidential election, or right after. And then that'll be it for the year. All right, let's take a look at the pound dollar. This is just a really ugly chart, folks. And this is going to happen until this Brexit vote is done 2 weeks from Thursday. It's very nasty price action. The only thing is positive on this chart is that the 200 exponential moving average, being that green line, has really held price below it. It's tested it like 5 times, 6 times, and it cannot break that 200 exponential moving average. So I want to sell this with a nice big red candle. However, I don't like the way price action is left of the chart. And also we have the 10 and the 55 exponential moving average and the daily pivot point. So my vote is I'm not even going to do anything with the pound until after this vote. So the pound is off the watch list until after the Brexit vote, and we know what they're going to do. You know, they're only within 3 or 4 points on each side, for or against, to stay or to go. So we just need to, just be patient. There's 40 other pairs we can trade, folks. There's 41 currency pairs we can trade. This one is not on the list. Let's take a look at the Aussie dollar. Now, the Aussie dollar is really been sideways, but it's sitting at resistance. It's been up at this resistance area and really hasn't done anything for the last 2 days. And what I see here is we're just going to wait. We're going to get some reaction whether they do anything with their interest rates or they do something with the interest rates. We're just going to see and have to wait for that data to come out. However, that data does not come out for another 3 hours and 15 minutes. So, we just have to wait. I wouldn't do anything with the Aussie dollar until this data is released. However, I did put a trend line on here. It's a valid trend line. It's a 4-touch trend line. And I just like this to break this and get below the 55 and the daily pivot point. We'll enter this at 0.7345, and at the S2 pivot where the 200 exponential moving averages, will take profit at 0.7295. So I think we have some good opportunities here, and we can really take advantage of this. We'd like to see them not do anything, and let's see if we can just get this to come down and give us our entry. But other than that, if they don't say anything pertinent and we get no stimulation out of this currency pair, it's going to be like the euro. It's just going to stay sideways. All right, let's take a look at the New Zealand dollar. The New Zealand dollar actually, gave us a little breakout yesterday, and it did break finally through the daily pivot point. And then in early Asia today, it broke below the 55 EMA. Now we're sitting with the 55 EMA, and the 10 exponential moving average is right on type of price. This is in a great place to sell at 0.6914. Now, traders, you can take this trade now. You don't have to wait. However, you do have to be aware that your stop's got to go right above that daily pivot point, because this probably will react to the Aussie statement. And like I said, that's hours away, and we don't want to be in front of that freight train, right? So we'll have to take a look at this. But if you're going to take this trade, because it is really in a great spot to take it, you need to put a very tight stop. Like I said, just above the daily pivot point, about 6 pips above it. And if it breaks the daily pivot point, it just was not meant to be. But the trading pair, the New Zealand dollar, is bearish. My bias is bearish. I want to sell this pair. Okay, let's take a look at the Euro Aussie. Euro Aussie not doing much. We talked about this yesterday, and it went up and it came back down, and now it's sideways. And if you look left of the chart, it's just really nasty price action. Again, it's an Aussie pair. I'm not doing anything until after that statement comes out, and don't know if I want to do anything. This needs to break either to the downside or to the upside, but it needs to do something. We really don't want to be trading in this, if you look left of the chart, into that what I call Forex junk. This is just really a disaster here. So we're just going to have to wait. It really hasn't made its mind up in which direction it's going. However, I would like to get in it at 1.5399. We'll get out at 1.5305. Folks, that's a 90 pip trade. So if we can break this and we get direction, we can really do nicely on a Tuesday. Okay. All right. Let's take a look at the euro yen. This is our last of our 6 currency pairs. This pair continued to move up, and we talked about this yesterday. And I did put new numbers, and I did put a new fib on the chart today. I did not leave yesterday's on there. But, we said we would like to see this come back up to this 200 exponential moving average, and it did. And it's sort of in a great place where we could take it at 122.21, and we'll get out at 121.00. So it's in a great spot. It's a nice 70 pip trade. The problem is that price is below current price. Then we have a daily pivot point and a 55 exponential moving average that we need to break through. So if you're going to take this trade, you're going to have to do it now. Like now. When you see this video, and if we're still around this 200 exponential moving average, you can get into it. If it's already gone and it's down near the daily pivot point, you just have to wait for it to pull back. And the euro yen's really good about pullback, so it's not like it's not going to pull back. You will get a pullback. I'm hoping we get a pullback at London Open and we can enter this trade. I'm not looking to do anything with this trade in Asia. I will wait for London Open. All right, traders, that wraps up our 6 currency pairs today on Tuesday, June 7th, 2016. Traders, on behalf of myself, William Gilday, our great friends at FXCL Excellence in Trading, I want to thank you for joining me. Please come visit our website at fxclearing.com for your trading solutions. Traders, have a great trading day, and always remember to trade smart and not hard. Traders, we'll see you in about 24 hours. Take care now. Bye-bye.